Welcome traders to this wonderful broadcast. This is me, Kwanele, your host, the senior trader at Fortizo Trading Institution. So today I just want to break down the market, more especially volatility 75 index. So I want to give you indicators that are working well with this kind of an instrument, because what is important in trading it is that we do not hide our secret, but we reveal to everyone so that everyone can be profitable in the long run. So make sure that if you haven't subscribed yet, make sure that you hit the subscription button, and if you are enjoying this video, or you are willing to find more of these videos, like the video, share it, and hit the notification bell. So let's get started. Before I give you simple indicators, the indicators that I'm going to give you, these are just popular indicators, which are built-in indicators. These are not indicators that maybe I made me myself, but these are just built-in indicators where you can find them in any trading platform. So before we get into it, what you need to know for you to select a good indicator, it is the type of market that you are trading. So here what we are dealing with, we are dealing with volatility index. So the type of the market that we are dealing with, it is volatility index. And another thing that you need to know to select an indicator, it is the behavior of that particular instrument, the behavior of that particular instrument. So before you use an indicator, you need to know how that market behaves, how that market performs, at which times of the day does it perform well. Then you will know which indicator to use. So don't just select indicators without having a proper study of the type of instrument you are trading and the behavior of that particular instrument. So here what you need to know is that if you are to analyze the volatility index, if you are to look back, you will find that the volatility index are trending markets. These are highly trending markets. I mentioned this on the previous video about volatility index, so you can check it out. I've placed a link in the description box. So what you need to know is that these are trending market. Forgive me with my drawing tool. These are trending markets. So if you are to look at them carefully, you will notice that when they begin to trend, the trend can go for almost a long period of time. So for an example, as you can see, this uptrend, it is an uptrend that began a long time ago. Still the market is going up, still the market is going up, still the market is going up. So you can see so that these are markets that are highly trending. So an indicator that we are going to use, it should be an indicator that is friendly to the behavior of this market. So for an example, and another thing, before I give you the simple indicators, another thing that you need to note, it is what is it that you need to do with the indicator, or why are you willing to select a particular indicator? Like the purpose of the indicator, you should give the indicator a purpose. If the indicator is to be your signal provider, you should be specific. You should define it well, that okay, this indicator I will take signals from it, like direct signals. If the indicator is going to be a confirmation tool, mention it that okay, this is going to be my confirmation tool, so that you know that when you use it, you do not use it in any other different ways. You use it for the purpose that you find out after doing your research. So indicators that we're going to use are just two indicators or three indicators. Firstly, we're going to insert our relative strength index as our oscillator or as our signal provider. Then we're going to put two moving averages. Why am I using moving averages? It is because moving averages are trend indicators, or moving average are just lagging indicators. So I use a lagging indicator, and then I use the RSI, which is a leading indicator. I made a video about indicators. You can check it out in my videos where I described what are leading indicators and what are lagging indicators. Okay, leading indicators are indicators like oscillators, like the stochastic and the RSI. So they take direction before even the market can change the direction. But lagging indicators are trend indicators like MACD, like moving averages. These are indicators that follows the market. So here we are going to insert two moving averages and an oscillator. So let's insert the relative strength index. Where is it? I'm going to use the 18 period, and then we are going to insert two moving averages, which is 25 period and 10. So we're going to use 25 and we are going to use 10. We are not just going to use them the normal way, like, oh, okay, I will look at the crosses. We are going to go deeper into it. We're going to go deeper into it because crosses at their own are not enough to give you best signal or what you are supposed to do. So here, what you're going to be looking at, the first thing that we're going to be looking at, we are going to be looking at our RSI. We're going to be looking at our RSI. So let me give you a clue. You see, I've 3 lines here: the 70 and the 50 and the 30. So here, what I look, what I spend my time mostly, it is the 50. So when the price is above 50, I am not willing to buy. I don't buy when the RSI is above 50. Like when it is above this line, I do not buy in this zone, but I'm only looking for a selling opportunity. Likewise, when it is below the 50, I do not sell, but I only look for a buying opportunity. So what is it that I am doing with this? What you need to know is that you need to focus like on the movement of the price. For an example, when the price shows signs of bending, like here, you have to look, okay, it is showing signs of resistance. You have to look, where is my RSI? Is my RSI below or 50, or is it above 50? So if your RSI is below 50, you know that, okay, I have my first confirmation in place, but I need the second confirmation. So there are 2 confirmations that you need in this strategy. You need a second confirmation. A second confirmation, it will be the crossing of the moving averages or the touch of the moving averages. When the moving averages cross or when the moving averages touch, that's your second confirmation. So when we've spotted this thing, you will then wait for this to cross. When they cross, you do not focus on the RSI anymore, because you focused on it when the market bent. So after it has bent, you no longer focus on it, because it will tell you that now stop buying or stop selling. So now you'll be waiting for your cross or for the touching of the moving average. Immediately when the moving average touches, you take your trade. You take your long trade when the blue moving averages crosses to the upper side. Likewise here, you see here, the market showed some resistance here, and it showed the resistance while our RSI was below 50. So that was our first confirmation, and then we were waiting for our second confirmation, which is the crossing of the moving averages. So here they crossed, then we pressed our buy button. So I hope I am clear. You wait for your second confirmation, which is the crosses. Here what you can see here is that, okay, price went up and it began to face some resistance all this way here. As it was facing this resistance, we can see that our RSI has been above 50 in this level, have been above 50. So here we had our first confirmation that, okay, price is facing struggles and our RSI is above 50. So now we are waiting for our second confirmation, which will be a downward cross of the moving averages, which happened here. Then somewhere there you press your sell button and you eat all the profits. So that what you need to be concern and what you need to focus on as a trader. It is a very, very good strategy, because volatility indices are trending markets. This strategy cannot work in currencies, it cannot work in other instruments, but it works well with volatility indices. So thank you for watching. Please smash that subscription button, share this video, like it. This is me, Kwanele. I love you.